Well, Mark, it turned out not to be such an unlucky Friday the 13th so far. Are we out of the woods?
Well, well, I don't want to actually call a bottom, but a lot of very positive things have happened this week. We had a lot of long-term indicators that only flipped to buy signals at market extreme lows. We had several of those actually kicked in place this week. We have a stimulus package that Nancy Pelosi and Donald Trump have agreed to, and of course we had a huge rally. And actually going into the closing bell, people were kind of worried about what was going to happen this weekend with the stimulus package. We actually saw for the first time in a while, we actually saw a sign of panic buying.
Yeah, in fact, the Dow closed, what, up almost 2,000 points today. A huge turnaround from just the other day.
Correct. It made back almost everything it lost yesterday.
Yeah, and so how do you explain that? Was that because Trump declared a national emergency and he talked about how they're working on a cure for the virus, on a vaccine, and how they're getting the kits together? Was it all that pep talk by Trump that turned it all around?
A lot of it was basically just trying to instill confidence back into Wall Street that the government's aware that there's a real problem and they're trying to fix the problem the best that they can.
But that was enough to do it, though. I mean, I'm surprised it rallied that much that quickly, weren't you?
Not really, because believe it or not, Larry, the sell-off this week really wasn't a result of anything to do with the coronavirus. It was actually based on the huge Six Sigma move, or what we refer to as another way of referring to Six Sigma as a market crash in the oil market. That oil market crash caused margin calls to be hit on hedge funds that were long energy. And hedge funds sometimes will go out and borrow for every $1 they have, they'll go out and borrow $50 to invest in a market. And because of that, they had to meet those margin calls. They had to sell the things that had been making money for them. So they had to sell bonds, gold, Japanese yen, and probably what people noticed the most they probably sold that had made the most money for them was, of course, stocks.
So it wasn't just Trump's reassurances that turned the market around today. It was also working out the situation with the oil sales.
It was oil, and actually, I believe Donald Trump actually even announced today that he actually had ordered the Strategic Petroleum Reserve for the United States to actually go in and actually buy oil.
Yeah, that hadn't been done since the after 2000 after 9/11.
It's been a long time since they've done that. Yep.
Yeah. So again, are we out of the woods? Is this just another temporary swing up, and we're going to have it swinging back and forth? What's ahead for the next week and next several weeks?
Well, the key thing is what happens on Monday. If we have, big selling pressure Monday morning and we have big selling pressure in the overnight markets, we may have to come down and retest those lows. But if we have some follow through action, it's a better sign that we're actually getting out of the woods on this. The most promising thing that I saw for this week is legal insider trading. These are CEOs and CFOs that work at major corporations. They have to file a report with the SEC anytime they buy stock in their company. This week, we actually saw one of the highest level of insider buying by corporate officers that we have since 2008.
So you feel then that what's ahead are more buying opportunities that you've been mentioning for the last few weeks when the market was going down.
Correct. I do believe that we probably are near the bottom, and this is probably your best opportunity to actually start buying. But of course, anytime you have big sell-offs like this, volatility naturally follows for the next few weeks. So if you want money to invest, don't put it all in right now. Spread a little bit out on Monday, spread a little more out on Wednesday, spread a little more out on Thursday, but don't shoot everything in at one time.
But stay in the market.
Yeah, that's the key to making money. Do not get out of the market. We've been through the Great Depression. We've been through major world wars. We've been through multiple pandemics over the last century. And every time the market always comes back.
And you think that it's going to follow that historic pattern despite the unusual circumstances of the past few months.
Correct. I believe so, because we've just weathered so many things. And I think now that we've actually have some confidence, next week we also have the Federal Reserve meeting. Now, the Federal Reserve also mentioned they was going to inject $1.5 trillion into the the bond market this week as well. And we have a Fed meeting next week, and there's very high hopes that the Fed will cut at a minimum 50 basis points, and the rumor has it they may actually even cut 75 basis points.
Okay, so what's your advice to those who are looking for bargain stocks to buy? You say that it's a buyer's market now. There's good hunting out there. What kind of stocks are we talking about?
I would probably look at some of the stocks that have actually gotten beat up quite a bit. I know some of your banking stocks, because of their tie into the oil market with the stocks that have the most exposure to the oil belt kind of got beat up. So look at some of those. Your J.P. Morgans, your Citigroups. Look at those, and then also look at some of your retail stores. I haven't seen the full details of the stimulus package, but it's going to have. I'm sure it's going to have something that's going to put more money in the consumer's pocket. So look at companies that will benefit from the consumer spending money.
Okay, Mark Collinsworth of Vere Global, thanks once again for your surprisingly upbeat analysis after another wild week on Wall Street. Thanks, Mark.
Thank you. I got you.